Principle 5, protect the house. If you're not protecting your company, who is? You see, a lot of times we hear from leaders and mentors, you got to work on your business, not in your business. It's easier said than done, because when you're working in the depths of your business, 60, 80 hours a week, stressed out, trying to get through the growth paradox and the messy middle, how will you have time to work on the business? But if you accomplish principle 1, protect and grow your equity, principle 2, build your own capital, principle 3, you've reinvested smartly, principle 4, you've built a culture of entrepreneurship. If you fall asleep on principle 5, protect the house, you could lose everything. Being an entrepreneur is like playing a game of whack-a-mole. You hit 1, 2, 3, and 4, 5, 6 pop up. Or if you have a boat with 100 holes in it, you plug 99, guess where the water is going to come through? It's going to come shooting through that one hole you didn't plug in your boat. You have an ethical responsibility to protect your business, and it could be devastatingly dangerous. I've had an experience where I didn't protect my business enough. I put myself in a vulnerable position. I put the business in a vulnerable position, and it hurt a lot of people. You have to protect the house. And I'm going to go through 8 ways that you can actually protect your house as best as possible, but you cannot ignore this principle. You need to take the time to rise above the trees, look down on your business, and see where you might be vulnerable. One of the key components I ask entrepreneurs all the time is, who are your protectors? Who do you have on your team? Who is sitting around the table helping you protect your business? You pay a lot of professionals. I'm sure you pay a CPA, an attorney, maybe others. Are they helping you protect your business? Because they should be. So do you have the right team of protectors? Again, do you have a world-class CPA? Not the mom and pop tax accountant down the street who does personal taxes. Do you have somebody who's experienced in business taxes? Do you have a wealth advisor who's helping you look at how to preserve wealth? And we're going to go through principle 6 here in a second, accessing owner's liquidity. How do you preserve the wealth that you're building? Do you have the right attorneys? And there's different forms of attorneys. Do you have a corporate attorney, a litigation attorney, an estate attorney? Do you have the attorneys that can help you protect you? Do you have mentors and advisors? Who do you have mentoring you and advising you? I'll tell you what, being an entrepreneur can be an absolutely lonely job. Who do you call when you need help? In my business today, I didn't have this before, but right now I have all these advisors that are sitting around me, and me and my partners don't make any decisions unless we have the unanimous approval of all of our protectors. It's critically important. Number 2, do you perform vulnerability assessments on your business? And I'm sure the answer is no. We don't have time to do this. We don't have time to perform vulnerability assessments on your business. Well, guess what? That's where the one hole in your boat, water is going to come shooting through. In the $100 million journey, in the $100 million journey workbook, I provide a vulnerability assessment checklist. You can actually go through, build yourself a risk committee, assign it to your team if you need to. Find out where there are risk elements in your business that you need to plug. Number 3, corporate governance and processes. I'll tell you what, just think about it from an HR perspective. A lot of companies don't have tight HR policies. Think about a time maybe you've been sued by a former employee. There's a lot of ambulance chasers out there right now too that are looking for situations where they can actually hold a company accountable for not having tight governance and processes within their business. So are your HR policies tight? Are your financial approval processes tight? Is everything within your business tightened up? Do you have resolutions? Do you have your corporate minutes together? On an annual basis, are you documenting that in your corporate file? Do you have all that together? And chances are you don't, because I didn't either. But it's so important to protect your business and protect the house to have really good governance, corporate governance, and processes. 4, insurance coverage. Did you know that there are other ways to protect your business from extraordinary events? A lot of entrepreneurs just go get the traditional commercial liability policy through an insurance agent down the street. But there are insurance agents and brokers who can fully protect your business in a lot of different ways. Have you ever heard of a captive insurance program as an example? I couldn't believe the types of coverages you can get from that. Loss of key customer, loss of key employee, cyber threat, crime, workplace violence, and a whole bunch of other insurance coverages you can't get traditionally that can further protect your business. Are you properly covered? Are you assessing your coverages on an annual basis to make sure you have all the areas of your business covered? 5, customer risk. Now, when I talk about customer risk, the first thing that should come to mind is credit. Are you extending too much credit to your customers that if one customer goes bankrupt, it could hurt you? We had a customer in the 2008 recession go bankrupt on us. They owed us $225,000. It almost killed the business. We went months trying to survive from that. We ultimately did, but it wasn't without a lot of sacrifice. What about your customer concentration ratio? Do only 1 or 2 of your customers do 80% of your revenues? That's a problem. You need to diversify your customer base. You can't have too much risk, customer concentration risk with 1 or 2 large customers. You got to assess their credit risk. Customers can really hurt you if not managed properly. 6, financial controls. Think about the financial controls you have in your business. Do you have tight financial controls in place with your accounting and finance department? Way too many times as entrepreneurs, we grow our sales and marketing, we grow our operations, and the last thing on our minds is our finance division. We don't build that up robust enough with the right systems and controls and processes and separation of duties. Does the person opening the checks deposit them and also record them in the system and also cut checks and sign them? That doesn't necessarily work. We've had many situations over the past 20 years where there was some theft and slippage within our finance department alone. As a matter of fact, one of our companies even got caught with a $250,000 wire fraud situation where our controller received an email that looked like it was from me asking them to wire money globally, but unbeknownst to her, it actually didn't come from me. It was actually an email scam that happened, and we ended up wiring money. We didn't have the right dual authentication approval processes for wires. Do you have all your controls in place for financial controls and make sure you're protecting your business? 7, one-door decisions. Think about it. Think about a one-door decision versus a two-door decision, okay? So here's a building, and here's a door, okay? If you don't have another door on the back and something happens, you can't get out. So you let something in, you can't get out if there's no back door. You don't have this, you only have a one-door decision. You can get trapped and get in real big trouble here. Whenever you're making a one-door decision, you got to bring all your protectors in place. You got to assess all the vulnerabilities. You got to be pretty darn sure that's the right decision. What I like to recommend to entrepreneurs is make two-door decisions. Make decisions that if something doesn't work, you can actually get out. As an example, if you hire an employee, a new employee, give them a 90-day probation period. It's not working out, you can let them go, no harm, no foul. That's a two-door opportunity, right? You go get a bank loan, you can pay back the bank, you can get out of it, it's fine. But there are some instances like you bring investors into your company, you don't necessarily have this backdoor. They're now part of your company. They're part of your cap table. They're part of your voting mechanism. They're part of this whole thing. You don't have a two-door opportunity. It could be a big problem. So I highly recommend entrepreneurs make two-door decisions as many times as possible. Anytime you make a decision, whatever it may be, make sure you have an out built into it already. Otherwise, you're making a one-door decision and it can be very dangerous. And last but not least at all is beware of snakes. Beware of snakes. There's a book called Snakes in Suits. And what you don't actually realize is that not everybody's in business for the right reasons. Not everybody's coming to be a good, faithful partner, investor, employee in your business. You've got to beware of those snakes that are trying to siphon the life out of you. And it could be people in your business today. They don't intend to be snakes, but they suck all your energy out. They're negative. They draw your culture down. You can't have that as a part of your business. Beware of who you're surrounding with, who you're bringing on your team, who you're partnering with, who you're hiring, which investors you're bringing on board, which banks you're working with. You gotta beware of snakes in suits. You have to protect the house. If you do not protect the house, everything can flow downhill. If you don't protect the house, you're not gonna be able to build a culture of entrepreneurship. You're not gonna be able to reinvest smartly. You're not gonna be able to build your own capital. You're not gonna be able to protect your equity. You could lose everything.